The Book on Advanced Tax Strategies. Chapter 9. Cashing out of a 1031 exchange without paying taxes. A 1031 exchange is a way to buy a property with the profits of a sold property without paying taxes. While a 1031 exchange is a great way to save on taxes when upgrading to another property, sometimes investors want to pull the cash out. One common way to do this is to refinance the purchased property. This is usually done with a cash-out refinance. Another way is when you use your primary home. If you lived in a house, then rented it out for a year, then 1031 exchanged it, you can pull some money out of closing since you used to live there. A house by itself is not able to be 1031 exchanged, which is where the renting it out part comes into play. The cash is in the form of excluding gains up to $250,000 for single individuals and $500,000 for married couples. Regardless of the strategy you take, always talk to a CPA before making a decision. Chapter 10. Supercharging your retirement with real estate assets. Most people assume that when it comes to retirement, the best and sometimes only option is to slowly invest into a 401k or an IRA, which stands for Investment Retirement Account, that slowly invests into the stock market over the course of 30 to 40 years. There is another way to invest that puts you in the driver's seat and doesn't rely on experts' best guesses at stock picks. There's a tool called the Self-Directed Retirement Account. If you can open a Roth IRA account, then you can open up a self-directed account. This is an account that allows you to choose what assets you want to invest in. This ranges anywhere from stocks, bonds, real estate, and even cryptocurrency. If you are confident you can have a better return than the stock market, which is around 7 to 10% a year, then a self-directed IRA might be the best choice for you. The downsides are that because it is a retirement account, you can't make any money from it now. You could buy a real estate property and have it make thousands of dollars a year, but you can't touch it until retirement age. You and your family also can't use the property. The person in charge of this asset, a custodian, needs to be chosen to ensure all the rules are followed.